On Focus today, we are looking at the performance of the Nigerian stock markets in the month of January 2019. Discussing this with me is a dealer from Capital K Trust Securities Limited, Andy Sako. Welcome, Andy.
My pleasure.
We have seen the market taking pressure from different angles. Funds, politics, then infrastructure in the larger economy. I want you to wrap it up as a player in the market. To what extent do you think the market has come under pressure for the first month of the year?
It's been a mixed bag, I would say. We've seen the market going through all kinds of swings, high and low, with investors assuming all kinds of dispositions in the course of the month. The month started initially and headed towards the negative, having lost at some point over 3%. And all of that loss was erased in about last week or last 2 weeks, where we almost got into the positive territory. However, the course of this week, we've seen the market returning back to where it was, a case of a dog maybe vomiting or going back to his vomit, as people will say. As we speak, the market is down by approximately 3% again, no thanks to the significant loss that we recorded in excess of 1.8%, which is quite significant for a single day. However, I do think that, the electioneering issues have had to exert some considerable negative effects upon the performance of the market, because investors, of course, are part of the economy, they're part of the political space, and they're also thinking what are the likely issues that may follow through elections.
So how do you advise investors to mitigate these losses?
One of the interesting things that the month of January has actually offered for investors is a depressed price situation that we have experienced. Of course, I mean, if you're already in the market, then you're under the weather to an extent. But if you are having idle funds or fresh funds or funds that you actually took out of the market and were waiting on the sideline, you're very likely to make a better representation by re-entering the market at this point, because quite a number of the prices are below what you will call intrinsic values, or fundamentally what should be deemed to be a right price for such stocks. So what the average investor should be looking at is, where are the opportunities? And once you have this kind of discussion with your stockbroker or financial advisor, they'll be able to guide you. Yes, it might not be a blanket check for all companies listed on the bourse, but there are a good number of them that are still doing very well. They're holding up their heads above waters. And don't forget that we've just also entered the earnings seasons, and we're beginning to see results trickling in. So the likes of banks, particularly the tier 1 banks, are almost out there with their results, because some of them have already gone to the extent of sending such results to the central bank.
We are going to see the presidential election coming up February 16th, then
right.
March 2nd governorship, and the other ones. Then inauguration of a new administration.
Yeah.
We'll have to wait till almost half of the year. So within that period, this apathy in the market, you think that immediately after the presidential election that it would vanish, or people will still nurse some fears to wait till when we have a new administration inaugurated? So if that happens, how or what do we expect?
Elections will come and go. Now, the key issue is, will the elections be held or not? Issues around whether it is credible or not credible will be ironed out through processes, whether it be processes of adjudication or whatever. There will be an election, that's given. Okay? I haven't seen any significant threat to that, right? So whether it is the current government that will remain in force or an opposition government that will take over the mantle, we've seen all those faces in our climb. So there will be nothing new to my mind. Critical for me is that the election holds. A president is not specifically, well, the governors and all the like, right? However, whether inauguration takes place in February or in May is not the big deal. Now, there will be a waiting process, which we all also understand, and that can bring about some level of volatility rather than total uncertainty. What people fear most is uncertainty, not just the volatility of the market. And volatility of the market is an everyday phenomenon. So that prices will go down or high is commonplace. We'll continue to see that even if the best of government is in place, no stock price remains fixated or points in one direction forever. So we'll continue to see those gyrations, okay? Critical for me, which is the crux of the matter, is how are these entities listed on the board doing in terms of their fundamental performance? Can they still hold on to themselves, rewarding investors, whether it is by dividend, whether it is by bonuses, or capital appreciation, in whichever form? And for as long as there is no threat to their going concern, in other words, you still wake up next year and find a GTB standing, a Zenith standing, a Nigerian brewer is doing this business, a Dangote cement still producing cement for you and me to engage in, whether you talk of roads or whatever infrastructure you're looking at. Those, to me, are the cardinal issues for investors to keep their eyes on. And to that extent, I see more of promise than anything else.
But what level of understanding do we expect from our foreign partners, I mean foreign investors, who for some time now seem to have been taking some money out of the market and watching from the sidelines?
You know, the beauty about capital is that it operates like water. Water will always find its level. You don't need to probe a foreign investor to come into your client. They do their reading from whatever parameters that they assert, right? So if they look, in the first place, you did not induce them to come. And because the market is a place of free entry and free exit, they decide when to come in and when to pull out. The key issue is create the environment that makes it desirable for an investor to come. So capital will always find its reason, no matter what you make. If money is going to flow to the US today based on key parameters, whether you're looking at stability or improvement in interest rates, as it were, or some other fundamental issues, it will move. If tomorrow US becomes heated up and China is the next destination, capital will always find where it is best needed.
Thank you very much. Let's leave it there.
Great pleasure.
My guest has been Andy Saku, a dealer from Capital K Securities Limited.
And that's how we wrap it on Business Week. Stay tuned for more next week. I am Yemisi Landry Ido.